and marketing. But it's impossible to talk about restaurants without sooner or later coming to grips with how to best manage your numbers. And so today, that's why we brought in Jane Bennett, and her company, Keystone Business Services, specialize in doing restaurant accounting. And so it's going to be very helpful for you to see how she's organized current issues, common questions, daily, weekly, and monthly responsibilities. And that at any time, if we're talking about a format, an item, or maybe a targeted cost, and you'd like to talk more about it, we can just kind of personalize this to make sure that we answer your questions. So with that, Jane, why don't you just take on over and run us through the info?
Okay, great. Hello, everyone, and hi, Clay. So like Timothy said, this is going to be all catered to you. So I am Jane Bennett, and I own Keystone Business Services. I've got over 20 years of experience with restaurant-specific accounting. My husband and I started our firm in 2009. And our client base runs anywhere from small independents to franchises to clients that have, anywhere from 1 to 7 restaurants. We've got franchises, we've got pizza places, we've got steak places, seafood places. So we run the gamut with our client base. Our goal with our clients is to help our clients understand, 1, where they are now, and 2, where they would like to be or need to be. And so with that, we present the numbers to them so that we can try to get there. So for the advisors, when y'all are talking to restaurant owners, there's a lot of different reasons that people start a restaurant or buy a restaurant. They've either always dreamed of opening their own restaurants. You've got a lot of chef owners that they've been a chef in a either a large corporate store or a small mom and pop, and they want to open their own. So they've branched off. Some people buy franchises. Some people want to invest in restaurants. I question their sanity sometimes, but they do. They want to invest in restaurants. But once they have it, great. It's like, all right, we've got it. We own it. We're running it. What's the goal? Some people want to leave a legacy. They want to, leave it to their kids. Some people want to build it up and sell it. That's their, end game. A lot of people want to franchise, and they may not even be going into it with the end in mind, right? They may go into it, and then it becomes, hey, this is a really good franchisable opportunity. Some people just, they want to own a restaurant, and that's what they want to do, and that's what's providing for them and their family. So you have a lot of different varied clients and backgrounds that come with these restaurant owners. For these restaurants, the common theme for all of those goals previously discussed is profitability, right? You can't sell it, you can't franchise it, you can't leave a legacy, and you can't provide yourself for yourself without being profitable. Seems like a very basic concept, but in the restaurant industry, that's not as easy to do as it seems. So in the restaurant, there are obviously restaurant owner responsibilities, right? There's the obvious responsibilities. You've got to have a great concept, right? You have to have good food. You have to have good ambiance. You have to have a great location, right? Location. That's what all the real estate people tout. But you could have a great concept, but if it's not in the right location, well, then you're not going to do yourself or anybody else a good service. There's a lot of owners that are chefs, right? And they are great in the kitchen. They are great with coming up with a recipe. They are great with coming up with, a whole meal, a whole menu. They are maybe not so great at running the front of the house. Maybe not so great at the paperwork aspect of the business, right? So you need to surround yourself with the experts. If you are great, you're the chef, you're in the back of the house, then you need to hire a great front of the house manager. Somebody that's going to be really strong where you are not. You've got to hire great staff. So not just your key staff, your managers and everything, but your servers, your busters, your dishwashers, right? That has to be good, solid staff. And that's where your good managers come in to help you hire that great staff, right? So those are the obvious ones, right? The not so obvious responsibilities, oversight. That is the number one thing that it seems like it would be an obvious one, but it's really not, because if you're the chef owner, you get so bogged down in the kitchen and you're bogged down with menus and ordering and running that kitchen that you forget, oh, hang on a second, there's a whole other half of the restaurant that I need to be keeping, on top of. So you've got to have oversight. You've got to stay on top of your numbers. Obviously, because we want profitability, have to know what our numbers are. Not only staying on top of your numbers, you have to understand what you're looking at, right? So if you're presented with a P&L, an income statement, and you get down to the bottom number, and that's the only thing you're concerned with, you're only concerned with, did I make money or lose money this month? You're not really understanding then what those numbers are. All you see are, hey, I made money, I lost money, right? You've got to understand why you made money. You've got to understand why you lost money, right? Because that's going to let you know when there's a problem. If you're losing money, obviously you want to make money, but if you're losing, you need to know, okay, why am I losing money, right? Hold on, there's a problem here. And even if you're profitable, right, that doesn't mean that there's not a problem, right? So there could be areas where you could make more money. So you need to stay on top of the numbers, understand them, and then know when there's a problem. So for restaurant consultants such as Chris, and then restaurant accountants such as myself, the one thing that we harp on is the prime cost, right, in your restaurant. For some of my clients, when they come to me, this is like a foreign language to them, prime costs. What is that, right? It is the most important percentage you can focus on in the restaurant. Now, it's not to say it is the only one, but it is one of the biggest ones. So what is it? Prime cost is your cost of goods sold and your labor cost in relation to your revenues. Okay, it's very simple. It's just the cost of goods sold plus your labor costs divided by your revenues. Why should you care about it? These two areas, so your cost of sales and your labor, are the two largest expenses you will find in your restaurant. Those are also the two expenses that are directly within your control and your manager's control. What should yours be at? Depends on your concept. Anywhere between 60 or less than 60 to 65%. So our steakhouses, seafood places, those in our fine dining, they're going to be 65% or less. Your fast casual going to be 60% or less. A lot of the franchises usually are going to come in anywhere from 52 to 55%. So, but if you are over those benchmarks, you're going to have some work to do. So how do you track it? Well, you don't overcomplicate it. It's very simple, and you need to keep it simple, right? It's not, you don't need to have a spreadsheet with 16 tabs in it and everything else like this, right? It's just a simple spreadsheet. And you track on a daily basis your revenues, your labor, and then your purchases, right? Your food purchases, liquor, beer, wine, and your non-alcoholic beverage purchases, right? Those are your inventory items. It's good to use this as a tool to share with your managers so that they are aware of where you are on a daily basis and a monthly basis. And this is just an example, and it literally is just this simple. You've got your date, your net sales, your labor, your purchases, and then the calculation for the prime cost. Now, you should track it daily, but don't freak out if one day it's 77%, like it is in this example on the 4th, right? There's going to be days where you thought you were going to have a good day, but maybe it rained, or it got cold, or there was construction on the street, right? That people couldn't get in to see you. Well, your staff, for a certain expectation, didn't happen. Now we have a 77% prime cost. Okay.
Hey, Jane.
But there are other, yeah.
So how do you, you're buying your food weekly. How do you track your food costs daily?
Well, if you're doing it weekly, you could do this weekly.
Okay.
A lot of my clients have it, that they're purchasing different things daily.
But your payroll,
And so,
you can clearly track that daily, and that's how
yes.
you need to manage your
Because
payroll.
right, because most POS systems,
Yeah, it'll be
they're
right there.
web-based and they're doing it
Yeah.
daily.
Yeah.
Right, and if you've got people that are doing weekly purchasing, awesome.
Yeah.
Then you can just track this weekly if you wanted to. But you could
Well,
also
yeah, I mean,
track
not all food costs will be weekly, of course, but then again, I guess also if your menu pricing is correct and you're adjusting to changes in food cost and you're seeing those or realizing them, I guess, every time you make a purchase, then you can adjust. Or at least be aware, I guess.
right,
At that time. Okay.
right.
So.
Right. You can see at the bottom of the spreadsheet, so you've got it daily, but at the bottom is a cumulative, right? Because you don't want to freak out about the 5% prime cost, but then you don't want to pat yourself on the back for the 20% prime cost either, because that's probably an anomaly as well.
Right.
So if you keep it to where you get that monthly average as you're going along, then you're going to see, okay, we've got ups and downs, but as a whole, on average, how are we doing? So, but I put this out there because really it's just this simple, right? You don't need to complicate it.
Can you hear me, Ms. Bennett?
Can
you hear me? This
yes.
is Clay. Can you hear me, ma'am?
Yes, I can.
Just since I'm the only one on here, I don't want to jump in and run your show for you, but to let you know,
Yep,
kind of it's me, and you're talking about keeping things simple. To tell you the honest truth, like with me getting started here, we're very small, very few people. Most things are run directly through me or my wife. We don't have, we're doing most everything ourselves, maybe 1 to 2 other people helping. And we're doing things, and just to give you background so you can kind of understand what I'm doing, and it might help you explain this to my situation better. Will be 1 day a week. We have a very simple menu, and it's not going to have, like I said, I don't have a ton of employees or a lot of people I'm going through, and mostly all will be ran through us. And I don't know how to, I guess I'm asking, like, what's the best way with it being smaller like that? Because I like doing things just step by step, real slow, to where I don't owe a banker. I pay for things out of pocket as I go, and I just grow with something. And so what's a better way of doing that versus, I heard you talking about going through certain employees and doing certain things. It could be a lot simpler in my case, just because we're so small and things are 1 day a week.
Well, Clay, if you're, in your situation, if you've got a restaurant operation and it's 1 day a week, then as we go through this, the daily and the weekly issues really become the same. Many restaurants, for example, look at things daily. They're looking at labor breakdowns, even if it's only a few employees. They still want to know if they're on track with their limited sales and their couple of employees. So they'll look at things daily, but they won't really total them to the week. Purchases, labor totals, that kind of thing. So with you, if it's you and your wife and maybe 1 or 2 other people when you need it, it's the same thing. Right now, you're only 1 day a week. So your revenue and your costing for daily and weekly are really the same things. As we go forward, you still might want to organize your costs, whether you're buying things on your own and then you're just breaking out the receipt so that you can track at the end of the month your expenses, what's grocery versus meat, or what's food versus liquor, beer, and wine, what's direct operating and what's an overhead expense. If it's just a couple people and you buy very little and you pay as you go, then a lot of the things that we're going to be talking about, chart of accounts, coding invoices, might be a little bit more like you, just breaking them off of receipts. But other than that, I think the principles will be the same.
One thing I might suggest to you, though, is that you track your time. because that will be beneficial if you ever do decide to grow this thing. You're going to have to replace the things that you do with somebody that's going to have to be paid to do it. And that would be good data to have going forward, because you think, oh, I just work 1 day a week. Well, you probably work a lot more than 1 day a week. And so knowing what that actually is. The other thing is you may, flow along doing this and going, oh man, this is really lucrative, but you forgot about the 6 hours during the week that you put towards, making a trip to Sam's here, doing a little book work there, and all this other stuff. And so, so that you can get an accurate, a really accurate accounting for what you are actually making for the amount of time you invest in it. So, and that can be a pretty simple, just any way you want to do it, a little note on your phone. Looks like, look like I spent about 2 hours working on the financials, or I spent about 2 hours going to Sam's, or whatever the situation might be. Just might be some good data to have. Certainly not necessary for any, tax accounting or anything like that, but it would be nice data to have potentially.
Yes, sir.
Okay, so let's take a look at after prime cost. What are other things that, you've got to, even in a 1 day operation, you still want to kind of manage?
Right. So we always focus on that prime cost, right? Because those are the two biggest expenses in the restaurant as far as profitability or things that are going to affect profitability. But there's also other expenses, right? You're not just buying, food and then paying people. So you've got to watch the other expenses as well, right? And a lot of expenses you directly control, kitchen supplies, menu costs, bar supplies, any kind of equipment that you're renting, right? An ice machine or a dish machine. You've got advertising and marketing for your restaurants, repairs and maintenance. If you have music and entertainment, right? Those are things that you can control, and that you don't want to forget about those, right? We always want to focus on that prime cost at first to make sure, because if your prime cost is way over where it should be, we can deal with these later, but we want to get that prime cost under control. So those are, but we just can't forget about them, right? So everybody always asks me, well, what these other expenses, what should they be, right? So your direct operating expenses, which are those things like equipment rental, bar supplies, kitchen supplies, which is a big one, right? Because that's encompassing a whole lot in the restaurant. But those expenses should be anywhere from 3 to 5%. Your advertising and marketing, that should stay around 3 to 4%. Utilities expenses usually come in around 1 to 3%. Your general and administrative expenses, which are things like credit card fees, insurance, like your general liability insurance, that's going to fall in this category. Bank fees, that's going to come here. Any kind of consulting that you have, any kind of legal expenses, right? That's all going to fall into this category. And you want to keep that category at less than 10% of your revenues. Repairs and maintenance should come in 1 to 3%. Okay. And now when I say this, should come in 1 to 3, that doesn't mean that you have to spend the 1 to 3, right? It just means that you shouldn't go over the 3, right? If you spent less than 1%, okay, great on your repairs and maintenance, terrific. There's an argument for advertising and marketing. Some people will say, well, if you're not spending at least 3% on marketing, then you're doing yourself a disservice, right? And that's a debate a lot of people have. So some people think, well, it depends on what type of marketing you're doing. So you just don't want to go over those benchmarks. The occupancy cost of your restaurant should not be any more than 10% of your revenues. Now, when we talk about occupancy cost, we're not just talking about your rent. Okay, a lot of people think just my rent is my occupancy cost. Your occupancy cost is your rent. If you've got percentage rent, I've got a lot of clients that have percentage rent. That's included in it. If you've got any common area maintenance expense that goes in with your rent statement, that's included. Some of the landlords will bill back their portion of the property insurance. That goes into it as well. So that occupancy cost is the total of it all. It's not just your base rent. And that's where a lot of people get confused because they think, no, my rent is good. And then you add all the things in. Now all of a sudden they're at, 15, 16%. So if we do the math, okay, you've got your revenues at 100%. And on this math here, I went on the lower end of all of these categories, okay, just to be conservative. But you've got your prime cost at 60%. Those controllable expenses, which were the other categories that we just talked about, at 18%. If your occupancy cost is at the 10%, right, then your profit margin is at 12%. That's not a lot of wiggle room for to play with here. I mean, you've got to really watch these costs because 12% profit margin is not a lot. For a restaurant, a 12% profit margin is good, is really good. People in other industries, that are coming to me, they're opening a restaurant and they're from other industries, they look at that and they laugh, right? They're like, 12%, that's nothing. That's good in the restaurant industry. Typically, you're seeing 5-6%. So 12% is great. But any of those categories creep up, right? If you're at the high end of all of those categories, that profit margin is going to come way down, way down. And that's not included in any kind of corporate overhead expenses. So
Jane,
you really got to watch that.
Jane, what do you normally see? I mean, you do a lot of folks. What would you say you normally see?
As a profit margin?
Yeah, for like a mom and pop. That's what I do a lot of with non-franchise, mom and pop, owner occupied, kind of scenario.
You're usually seeing, we're usually seeing around 3 to 7%.
3 to 7.
So because if I'm going to go back one slide, right? Direct operating expenses, 3 to 5%. Well, they're typically, most people are at the higher end of that, right?
And is that where you normally see the difference? Or is it do they mostly control their food costs, control their salaries, but then where is it that what's normally where you see the ones that are, and I'm not talking about the ones that, don't have control, but the ones that, have gotten it rolling and they've been in it a while, things are going, but
So typically if they've gotten their prime costs under control, like their labor and their food costs, and that's within control, usually it's in the direct operating expenses and the G&A expenses, right?
Okay.
Because a lot of times what slips up on them or sneaks up on them in that G&A category is credit card fees, and then insurance, right? Insurance, you have to have it, right? And it just depends on how covered are they, right? And sometimes they're over covered, sometimes they're under covered, and it depends on the market, right? I can guarantee you that all of the insurance rates are going to go up this year because of COVID last year and because of the freeze we had. Anytime we have a major event, like when we had Harvey down here, Lord, the insurance premiums next year just skyrocketed, right? Because the insurance companies are making up for it. Well, that's, you can only can control so much, right? You can shop the rates and you can go to different brokers, but at the end of the day, it's going to be what it's going to be, right? So that's an area that we see that it just creeps up, and you can only control it so much. But the direct operating expenses, go ahead, Chris.
No, I was just going to add, I think the reason these benchmarks are so helpful to you advisors is that sometimes, because remember, they're all based on revenue. So sometimes just because you might be working with a client and the revenue is way off, the revenue needs to be built so dramatically that sometimes these expenses will be higher than this. And it's all because it's just a matter of revenue. I mean, I have worked with some people that didn't look like they were doing a tremendous amount of marketing or doing anything that was really expensive, but just managing the website and doing some email and printing some materials and stuffing their to-go bags and having some kind of a community program totaled up like 6% of their sales instead of 3 and 4. And it was all because revenue was so low. So that same marketing program, after it worked for a little while and revenue built, now all of a sudden, the same marketing cost was only 3% of sales. I've seen that in the occupancy too, where if somebody, especially in a smaller community, gets a good location and the rent looks reasonable, but if their sales are, say, only, $30,000 a month, all of a sudden the rent isn't 6 or 7% of sales. It's 8, 9, or 10. So overall occupancy is now at 12 or 13. But then once they get that 30 a month to 40, the rent is the same, and all of a sudden they're in line. So it's real important, for you advisors when you're working with people to understand that, what the benchmark should be, but then compare it to what the revenue levels are with the people that you're working with.
And Chris is right in that. There's a saying, sales fix everything, right? I've got a client that we've had for 7, 8 years, and throughout the years, they have continually worked on the expenses. They have, they've gotten every expense under control, have gotten it down to where it is just where it needs to be, even less than some of these benchmarks, and they're still losing money. And what it all boils down to is sales. Right? Because it's to the point that, okay, if you can increase your sales, there is nothing else to work on. We've, done the credit card fees. We've, talked to different brokers about insurance. We've, looked at the direct operating expenses. I mean, they are down. We're looking at it going, there's really nowhere else that we can look to shave an expense, and it's all revenues. And those are the frustrating conversations, because it's revenues. What do you do to get those revenues up, right? I mean, I don't know. That's when we have consultants come in, because I can tell you where you are, and I can tell you what category is your high in or where you can work at. But once everything is in line to where it should be, then it's based on your sales. So Chris is right. I mean, you could have great rent when you started out because your pro formas and your projections said that you should do X number of dollars in a month. Right. But then you got there and you didn't do it. And then now your occupancy cost is 12%. What fixes it? Sales. So, but when sales isn't the issue, where we see a lot is the direct operating expenses and the G&A expenses.
It's kind of, let's see, I think what's next? Let's show them what the P&L really should look like. Because I know when you guys, there you go. This is something that I want Jane to kind of walk you through, because Clay, this is going to be helpful as you and your wife build your business, and you just want to sort of categorize sales, and you want to be able to track your period, your year to date, or maybe you want to actually take what you're doing one period, compare it to that same period previous year. You kind of need a format to do that. And I know that advisors from time to time have a tough time working with clients when they want to do a financial analysis, and if all they do is get a one-page QuickBooks printout, which will just show you, here's my revenue, and then I've got alphabetized the checks I cut, and look, thank God I got money left over. The good news about that is, if it is accurate, at least it has all the expenses and there's money left over. The bad news is you can't really work well until you put everything in proper categories, and that's what a standard restaurant P&L does, is categorize it so you can more easily manage it.
Right. Yeah. This is where we have presentation matters, because like Chris said, and a lot of the advisors are fighting this, that they're, somebody comes to them, hey, I'm having some problems. I need to make more money, or I'm not making money and I don't know why. And then they're handed a P&L where here's your sales, and then here's all your expenses in alphabetical order. Well, for the restaurant advisor, you're wanting to pull out those prime cost numbers, because that's the one area you want to focus on to, as a starting point. Let's see where your labor is. Let's see what your cost of sales is. But you're going to have to, cherry pick all those categories to then manually find those numbers. So for our clients, we put the P&L in this presentation, so it's very easy to see, right? So we've got our sales right up top. We've got our cost of sales right below that. We've got our labor cost following that, which then gives us our prime cost, because we want the focus to be the prime cost, because that's the one thing that you're going to be focused on as far as profitability. Down below that, we've got your controllable expenses. So those direct operating expenses, the advertising, the G&A, those categories. Below that, we've got your non-controllable expenses. So your occupancy costs, because that's not a controllable expense. Your depreciation, that's a book expense. It's really just based on your assets. Any kind of corporate overhead. So if you've got, now Clay, this probably doesn't apply to you, but if you've got clients that have several locations, then they may be splitting up their salary among those locations, and that's going to go in that corporate overhead section. If they've got a corporate office, right, then the costs associated with that corporate office are going to go down there in the corporate overhead. Any kind of interest expense, because again, you can't control that. And then we've got your net profit or your net loss. So, and then this is just a summary. Our income statements come with this summary, and then behind it is the detail. But we've got a lot of clients that really just kind of want the nuts and bolts for the month. Show me, you know, just some summary here. I don't have time to delve into it, and I don't want to take 10 years to get down to the bottom line. So we just give them the summary, but it focuses on that prime cost. And it helps them. And I'm sure if you're an advisor and you're looking at this and you're saying, yeah, that would be very helpful if all my clients came in with this, so I didn't have to hand pick everything out to try to make this calculation myself. So any questions on that? Everybody good? Okay. So some common questions and misconceptions, right? Common misconceptions. I'm doing okay because there's money in the bank. All right, and my managers are staying on top of the labor and food costs. So they've got it. I don't need to sit there and micromanage them. Just because there's money in the bank today doesn't mean there was money in the bank yesterday, and doesn't mean there's going to be money in the bank tomorrow, right? A lot of clients, you know, come to me. Oh, well, you know, I do okay, and then payroll comes and I don't have any money, or sales tax payments come and I don't have any money, right? Because realistically, the comptroller would like for you to, those sales tax amounts that you collect from the customer, you're putting into a nice little account over here. That's not happening, right? They're using it for cash flow. Okay. So they've got money in the bank today, but they don't have money when it comes time for the sales tax payments to be made. So that's why they've got to stay on top of these numbers so that they will have some money when all of these things come due. My managers are on top of the labor and food costs. Maybe they are when you're standing there. Maybe they are, 1 month, right? But this goes back to oversight. You're rocking and rolling along, and then I'm sure y'all see a lot of clients that come in that they've been open 3 or 4 years, right? And so they've had some managers that have been there with them for a while, and they say, sure, they're on top of it, and then you get right down to it. You pull out that labor cost, and you say, guess what? Pull out that cost of sales. You get down to it. No, they're really not on it. You think they are, but they're not. A very, very common question that I get. I will hand a client an income statement, and there is a net profit at the bottom line, $30,000 net profit, right? And they say, I don't have that much money in the bank. Why is my income statement show I have $30,000 if I don't have $30,000 in the bank? Well, not everything that you pay for shows up on that P&L, right? So there's the income statement, and then there's cash flow. Okay, so things like sales taxes, right? That doesn't show up on your income statement. That's just a pass-through. You're holding it for the state. You're using the money, but you're essentially holding it for the state. It's not an expense to your business. Tips for your employees, it's not an expense to your business. So that sits over on your balance sheet waiting to be paid. So it's not going to come off of the bottom line. And a lot of times we have issues with petty cash, right? So petty cash, I mean, it's just something, sometimes it's just really not, people don't think, oh, it's not that big a deal. I sent Jose over to get, some lettuce. I mean, what is that? That's, maybe $2 if it's that, right? I had to go over here and I gave the guy gas money to take care of this or whatever, blah, blah, blah. Well, after a while, that $2 here and that $50 here and that $30 here, it adds up. And then so you're not getting all of those expenses captured on your income statement. So you're overstating your income, right? You're using that cash, but you're overstating your income and you're not capturing that expense. A big one is if somebody's remodeling their restaurant or they had to have some work done, right? So they went and they got some day laborers, right? Or, their manager's kid comes in to do the work, right? Well, they pay them cash, right? Which is no big deal, right? But they forget to tell me, or they forget to record it. And then 6 months later, I'm saying, hey, do you have $45,000 in cash sitting at the restaurant? And they say, no, what are you talking about? Then we have to go through this scenario. Oh, yeah, I did. I paid those guys to paint the outside, and they did some pressure washing. It wasn't a big deal. Well, it added up, right? So you just have to make sure that every expense that you're, paying for out of that restaurant is getting captured, is getting recorded. So there's things that you're doing daily, weekly, and monthly in the restaurant, right? Daily, I would recommend that you are checking the bank to make sure that your credit card batches are posting, they're depositing. There's been a number of times that I've had a client, all of a sudden the bank, it's Friday, it's payday, the bank is calling saying, hey, there's no money in here, these are all NSF, or the employee comes back to them to say, hey, I couldn't get my check cashed, right? And you're saying, well, there's plenty of money in the bank, right? I just checked it, last week, it was fine. Then they log on to the bank and lo and behold, wait a minute, I don't see a credit card deposit since last Friday, right? It's been a week. You'd be surprised how often that there is a problem between either the credit card, the POS system didn't batch out properly, or there's a problem between the bank and the credit card processor, and that they're just not talking for some reason. So it's important to at least log on once a day just to verify, make sure that there's no, fraud activity on your account. That's so rampant these days. It's ridiculous. You should review the previous day's comps, voids, and employee meals. So comps and voids, they're going to happen, right? It's unavoidable. The employee meals, there's a lot of restaurants that have an arrangement with their employees. I'm going to give you 50% off of meals, or I'm going to comp your meal completely, but you can only order XYZ off the menu, right? You need to double check to make sure that that's what they're doing, that they're not taking advantage of that benefit. And then you need to talk with your managers about the previous day, right? How did it go? Were there any issues? Did we have any problems? And then go over, if there's anything that you're seeing on the daily sales report that needs to be, you need further details on. So weekly, for our larger clients, I shouldn't even say larger clients, but really for anybody, it's a good idea to have just a weekly purchasing budget. Whether you're doing it, whether your manager is doing it. So, you're kind of looking ahead at the week. Do we have special events coming up? Is it just a normal week? Is it, is it Mother's Day? Is it Valentine's Day? Is it, graduations, right? Or is this just a normal week? Have a budget for purchasing, right? And then for labor. And then discuss that with your managers based on your revenue expectations. Because sometimes your managers may say, oh, wait, but don't forget, we're having that special, we're having, the DJ come in Friday night or whatever. So we'll probably have more, we'll need more liquor, or we'll need XYZ. So it's a good idea to kind of have this conversation. If you've got.
I'm sorry, Jane, but this is just a good point from an advisor point of view to make a note that what Jane was talking about, that even the small single unit hands-on operators will do this weekly, is sit with their key staff, plan the week so that we know, even if it is we're running to Sam's or we're buying at Restaurant Depot, we're planning by the week, we're scheduling by the week, we have revenue goals by the week. You'll find that the best way to get good monthly numbers is to manage the accounting by the week. So Clay, that might work easily for you if you guys have a particular venue, you're only open 1 day a week. So you've got weekly planning for schedule, for purchasing, for what your revenue expectations are going to be. And if it varies slightly, it varies by the week. And then if you're accurate with your weekly planning, it's going to be a whole lot easier to get a monthly statement done that doesn't surprise you.
Right. Yeah, and if you've got that weekly plan, then kind of analyze the previous week, right? Just say, hey, did we hit the mark or did we miss the mark? And if we missed the mark, why did we miss the mark? And how badly did we miss the mark? And then monthly, well, now it's time to see how you compared with your benchmark averages, and this is where our statements come in, because then we're looking at it as a whole. If you've been tracking your prime cost internally, right, with that simple spreadsheet, then it's now time to compare yours with mine, right? Are we way off? We should be pretty close, right? We shouldn't be, 5, 6, 7, 10% different. We should be pretty close. And if we're not, okay, then let's talk about why. If you've got a budget, now is the time to compare your budgeted numbers to your actual numbers. And then it's time to use that information to get a more accurate and realistic budget if we were way off on our budget numbers. Some of our clients want to compare year-to-date numbers at that point with the previous year-to-date numbers. Some of them want to compare, this year with the same month last year. So it's, really all in how much you're wanting to compare. But some of these are good. Or, good comparisons to do. You should meet with your managers when you get those monthly statements to talk to them about those areas that they control, the cost of sales, the labor, but then also those other categories that we talked about that they have control over, the direct operating expenses, right? If you're looking at your kitchen supplies account and wondering, how in the heck did we order, $7,000 worth of kitchen supplies? Let's talk about that, right? Because they're doing the ordering on that, so they're going to know. So those are monthly. And like I said, you've got your daily, you've got your weekly, you've got your monthly, and it's a lot of information and it's a lot of numbers to look at. So it's a work in progress, right? It's an ongoing thing. It's not going to be, you're going to knock it out of the park, right at the get-go. So it's a work in process. So any questions?
No, ma'am. Let me take that back. A ton of questions, but there's not enough time.
Well, as I said at the beginning, accounting is the kind of thing that, sometimes it's better to work with hands-on when you have a need. These are excellent principles and formats that all of your clients should be on. But when you have a need, when a client comes in, when somebody who has 1 or 2 restaurants says, okay, I want you to analyze what I'm doing, that's when you might need to go back to this recording and kind of help yourself with organizing their expenses, comparing it to the benchmarks. Then you'll feel a lot, better about advising where they are and where they need assistance. Again, it's impossible to do when the people just have a list of expenses and they look at you with that deer in the headlights look, like, if you're my advisor, help me. I'm working hard. I know my customers are happy. I know my food is good, but look at this, what a mess. I'm not making any money. You got to kind of have to categorize it before you'll be able to turn to them and say, okay, here's where we can help you. It's in occupancy, or it's in operating, or it's in your food costs, or it's in your labor. Because when it's just a list there, it's it's impossible for me to work with them.
Yeah.
Well, listen, Clay, we wish you really well with your venue. If it's a 1 day a week, is it because it's a large venue, you're in open evening? Is it entertainment, or is it a small restaurant? Tell us.
It's pretty small. Like I said, it's so new, and I have no clue what I'm even getting into. I'm not going to lie to anybody here. It's all new to me. I really enjoy man, I'll tell you what, it's a crazy world we live in now, and I'm not going to get political, but it's just wild with COVID and man, it's crazy times with this past election. I love when people can just get together and, man, put all that aside. Let's sit down and talk, treat people like people. Let's eat a little bit. Let's hang out. Let's be a community and spend time with one another. It's going to be one, like I said, I want to take baby steps. I don't want to get myself in a position and bite off more than I can chew. I want to kind of slowly go into this and see if I can make it into something over time. And be just Saturdays, just a portion of the year from 11 to 6 every Saturday. And where I live, I'm close to the Brazos River. And man, 10, 15 years ago, there was nobody down here. It's nothing but hay fields and cattle. That's it. And it's really changed a lot. You see everybody going by with canoes in the backs of their trucks. They're fishing on the river. There's these big, it's mostly all ranches around me, and they're getting chopped up into smaller properties, and there's just more people. And I told my wife, instead of complaining about it, how do we find some way to reach into these people's pockets instead of complaining about it? And maybe we can get some folks together and just hang out and eat a little bit and have fun. It's like I said, something we've always done down here. My son will be the 5th generation on the same property, and I have a lot of ties to it. Man, it's just something we enjoy doing, and hopefully we can make something of it over the next few years.
Well, we wish you the best with it. You're in good hands. So as you and your wife continue, and you've got questions about anything, how you're promoting it, menuing, go see one of the advisors, and I'm sure they'll be able to walk you through it. And if at any time they want to maybe bring us into that conversation, if they think that'll help, we can do it.
And I apologize. I really thought this was going to be something with a ton of people, and I was just basically going to sit here and listen. I wish I'd have gotten a lot more stuff prepared.
Nah.
You know, being the only one on here where I could have really picked y'all's brains. I appreciate y'all talking to a guy that I'm not going to lie, you're talking about deer in the headlights. I feel like that daily here lately, trying to get things going. I've always been a hard worker, and I feel like I've got a lot of ambition, but I ain't going to lie to you. I have no clue on a lot of this as I stumble my way through it. But it's encouraging to talk to people like y'all who are willing to talk to me and give me the time with this, because I know y'all probably deal with people that are huge in this industry, and I'm just a guy trying to start out. But I am very thankful that y'all took the time to do this, and I did get some good information, and I do appreciate it.
Well, Clay, we're just glad that you participated. So, you know,
well, that's my biggest deal right now is information. And you wouldn't believe, it's just hard to, you know, you see a lot of people that are successful around you, and a lot of them are pretty tight-lipped. It's like, man, I'm not trying to steal your show. I just, you know, it's hard to know who to talk to and know you're getting good, incredible information sometimes.
Well, Tim, let's speak to that, because I think your region has set up with restaurantowner.com, I think.
I have not been told that we have yet. So.
Okay, you might want to check again, because I thought Katrina and them
did you talk them into it?
Yeah, I thought that they had done that. What we're talking about, Clay, is a information source that would speak to what you just brought up, a place to go where maybe you can feel like you're going to get regular, current, accurate information, and it's going to be from small, independently owned, hands-on operators. There's a website called restaurantowner.com, and on it, there's a tremendous amount of information, some of which are the same principles that Jane was just talking about. You will find information having to do with numbers, but you'll find information having to do with operations, planning, marketing, negotiating with purveyors. You'll read articles there that are written by restaurant operators for operators. There's a discussion forum there where you can go and leave questions. So if you're planning events, or you and your wife have issues and you just think, why can't we talk to other people that might be like us? Well, you could post a question and say, is there anybody out there that's doing whatever it is, you know, that you want to talk to? And you'll be surprised. I believe there's a few, I don't know, there might be 10 or 11,000 members. So you'll get answers from people all over the nation saying, been there, done that, don't do this, do this. So it'll be well worth your time if you get on that website.
Sounds great. I appreciate it.
Well, and then just stay close to to Roger, because when we get the authorizations from our higher ups, we will certainly roll that out. So just keep bugging Roger as soon as we get that. That's gonna be something.
I bug him a lot. He's probably start blocking me on the phone.
I don't know. If he blocks you, you let me know. So.
Hey, well, this was fun, guys.
Great resource.
All right. So Jane and Chris, no problem with me throwing this up on my YouTube channel, correct?
No, I don't think you'd mind at all, right?
You have a problem, Jane?
No, not at all.
Okay,
not at all.
good. Just wanted to make sure before I did it. So I should be able, small enough, I should be able to compress it and get it up there. So. All right, and then I will send it out to the folks that registered, but for whatever reason we're not able to attend. So, all right, is there anything else, or are we pretty much done?
Jason, did you have any questions?
Oh, I am all good.
All right, well, you guys, I certainly appreciate it. Thanks a whole lot, Chris. It was wonderful to meet you, Jane. And
Absolutely.
Jason, enjoy your week off.
Yes, sir.
Oh,
Thank you all.
Take care,
Thanks, guys.
Clay.